YouTube. Okay, so it's preparing to stream. And then as soon as it connects, I will, okay, it says it's live. So I will transfer the host capability to you.
Okay. I'm on YouTube.
Oh, yep.
I love going live on YouTube.
You are on YouTube now. Great. It looks like it's working. Make host. Okay, and then Jonathan, if you'll just go to my profile, you can kick me off. Or demote me to an attendee. And then you should see the start broadcast for when we hit the hour mark. Do you see that?
Yeah, I can see broadcast. And I can see stop the recording as well.
Okay, great. Cool. So just kick me off whenever, and good luck, you two. And Henry, thank you again so much for being here.
Thanks for inviting me.
So I'm going to now, it's weird. I can't put you as an attendee. I can remove you, but then you won't be able to join as an attendee.
That's okay. I'll just watch it live on YouTube.
Are you sure?
Yeah, that's fine.
Okay.
All right.
You will not be able to rejoin the meeting. Goodbye.
You feel like you're a Donald Trump, like on The Apprentice now.
Yeah, exactly. Well, in the UK, we had Alan Sugar, who was he was kind of the executive on that. So yeah, he was quite good. He's one of these guys who was a complete sort of rags to riches story. So he started like trading like at 16 years old and then built this huge retail empire. So yeah, it was good. Okay, we're almost at the top of the hour. And we're now at the top of the hour, so we're going to get started. So let's see how this goes. Yeah, people are going to start tripping in. Got people phoning in.
One second.
It's awesome. It's great to do events in different time zones. I'm usually doing it on the East Coast, so great to have everyone. Great to have everyone here. Anyone who's on the East Coast, I have a lot of respect for you. Everyone who's joining from the APAC region, good morning. It's 9 p.m. on the East Coast. It's 9 a.m. in Hong Kong, isn't that right?
Correct, yeah. But even it's 9 p.m., there's nothing more exciting than crypto. So it's better than any TV shows or Netflix documentaries, that's for sure.
Well, crypto never sleeps. So
there you go.
That's something that we need. Let's give it one more minute and then we can kind of get going.
Excellent.
The way to split the screen. Okay, that might be just getting some production assistance. Okay, good. We're looking good.
I guess when I speak, probably the screen should pop up, Molly, no?
It was actually because I think YouTube streams exactly what I see. So if I put a gallery view up, then we have a gallery view on YouTube as well. Okay. So we have some Henry fans in the house. That's great. Why don't we get started, and I'm sure people will trickle in. Good morning and good evening and good afternoon, I guess, if you're joining from somewhere far east. Thanks everyone for joining us for another session of Links presented by Chainalysis. I'm Jonathan Nevin. I'm one of the co-founders of Chainalysis, and I'm really excited to be joined today with Henry Austinian. Henry is the PwC global crypto leader. He's a Asia APAC fintech leader as well. He chairs the Fintech Association in Hong Kong, where he's also an adjunct associate professor at the University of Hong Kong, teaching the first university fintech course in Asia. He's a TEDx and global keynote speaker, as I'm sure you're about to see. He's a best-selling published author, regularly quoted in publications around the world, including Bloomberg, CNBC, CNN, Wall Street Journal, Financial Times, on the topic of fintech. Before joining PwC, Henry was in a fintech startup. Prior to that, spent many years at UBS Bank in Hong Kong, having started his career in financial markets as a fund lawyer in Canada and Hong Kong. So thanks so much for joining us today, Henry. We really sort of have been following a lot of your work, and really excited to hear what you have to say on central bank digital currencies.
Thanks for having me, by the way, Jonathan. And also congratulations to you for your recent 40 under 40 prize. It's a big honor, and it's great not only for you personally and for Chainalysis, but also for the whole digital assets ecosystem. So well done. And thanks for having me today.
Thanks so much. And yeah, it was great to see on the list so many crypto entrepreneurs as people who are making a dent in the fintech space. So just before we get started, I also want to introduce Chainalysis. For those of you who don't know us, we are the blockchain analysis company. We provide cryptocurrency compliance and investigation software to over 270 governments and businesses around the world in more than 40 different countries. Our data, education, and support creates transparency for those that need to manage their risk, so that government agencies, exchanges, businesses, financial institutions can all engage confidently with cryptocurrency, and we can build legitimacy for the industry and realize some of the benefits that we're trying to talk about today, maybe also some of the big problems that we have with the existing financial system, and where that might be heading into the future. So what we're going to do today is really, unpack. I know that people read a lot in the press about central bank digital currencies. It's a hot topic, but there's actually a lot of nuance and a lot of progress being made towards central bank digital currencies. So really wanted to invite Henry, who's flies around the world usually prior to COVID, consulting to, working with, inspiring bankers around the world to consider what this new technology might bring, and really try and unpack the structure and the trends that we might see in the next 1 to 3 years. So I hope that people will enjoy it. We're not going to have like official Q&A, but if people want to pop into the Q&A and drop some thoughts in there, I'll try and weave those into our discussion. But why don't we just get started? Before COVID, I think I spoke to you. Every time I spoke to you, you were in a different hotel room. You were flying around the world. Where are you based these days, and where are you spending most of your time?
Yeah, well, I think for many of us, life has changed post-COVID. Well, I'm physically presently right now in Hong Kong. I just got back 3 weeks ago. And as you know, when you fly back in Hong Kong, there's a 2-week mandatory quarantine where you have a GPS bracelet on your arm. And if you leave your hotel room, it's up to 6 months of jail potentially. So I think people are taking it very seriously. And now 100% of people here are wearing a mask. So things are getting better. In the last couple of months, actually, I spent it in Armenia. My background is, I'm from Canada, but my background is Armenian. And we were there for a week of holidays in the first quarter. And of course, that 1 week ended up being a couple of months. But I have to say, it was a pretty good place to spend a couple of months. But normally, in normal times, I spend a lot of, as you mentioned initially, I run the PwC's global crypto team, and we have teams in about 20 countries. In the last 36 months, we did over 400 crypto engagements. And as much as you want it, a lot of these engagements, you need to be there in person. Although things have changed, I have to say, particularly with a lot of government clients, regulator clients, central bank clients, and that previously, pretty much all the meetings were in person. There would often not even be a dial-in. Right now, a lot of these meetings have switched to Zoom and WebEx and Teams and so on and so forth. So maybe the dynamic will change over the next couple of months.
Yeah, and you travel to these places, and I've been on the road a lot over the last 5 years. And I think before we get into sort of the meat of the discussion, I step off the plane and I try and work out, how am I going to pay for, the cab or the train or the bus to where I'm going, and try and like really understand sort of the local payment systems that there are in place in order to understand sort of how new technology could influence those markets. So I'm curious, just before we even get into the subject of central bank digital currencies, in all of your travels, what are the most advanced countries in terms of digital payment systems that we've seen? Because I think that it's interesting to know whether central bank digital currencies are going to impact those economies, or is it going to be the economies that haven't had a lot of development on digital payment systems?
Yeah, it's a great question. I think we have to look at two perspectives. One is in different countries you go to from a cross-border perspective. I think from a cross-border perspective, no country has a good system. I mean, the system is archaic. We all know, we can talk about it later. Today, the average cost of a cross-border payment around the world is 7%. That's the average globally. In many emerging markets, it's double digit, right? So on a cross-border perspective, frankly, nobody has it right. On a national payment, actually, I would say that, frankly, for a lot of countries, it's not bad. Probably the region or the country that I find the most impressive is, without any doubt, China. As many of you know, I left Canada 15 years ago. I went to study in China. I actually did a master's in Chinese law back in the day. I learned Chinese and I did this degree. And China, over the last 15 years, and being based a lot in Hong Kong, I've seen the evolution of China. And today, I would say, from not only from a B2C fintech perspective, China is 4 or 5 years ahead of the rest of the world, but even when it comes to broader mobile payments, just to give you a case in point, today, the mobile payment penetration rate in China is over 80%, 80. Just to put that in context, that's double advanced countries in this space like South Korea or Sweden or the Netherlands in Europe and so on and so forth. The US, by the way, is around at 30%. So from that perspective, China, from a mobile payment perspective, was very advanced. The problem that you have, however, as a foreigner coming in, is that you're not able to connect because you're a foreigner. You don't have your Alipay or WeChat Pay account. You don't have a Chinese bank account. So you're literally unbanked. And that's actually a very interesting experience, because you actually feel what probably other people feel around the world in a very developed or developed country, depending on how you look at it, place like China. So I would say from a mobile payment adoption perspective, usage perspective, and people's propensity to actually use new technologies and like payments, China is probably the area to watch. I will never forget when about 3-4 years ago, I used to give a lot of keynotes in the US and parts of Europe. And I used to always show the interface of WeChat Pay. And I would show all these functionalities that you have that you can do really by using your phone. And people often would say, that's a great beta. When is this going to come live? And I'd say, hey, there's like almost 1 billion users already. So I think for a lot of these things, like in CBDC as well, and I'm sure we'll talk about it, a lot of the action is happening in Asia, which is something I think a lot of people still forget in many Western countries.
Yeah, and I think that I was at the Beijing 2008 Olympics and actually had the real experience of being completely unbanked, because I had a Bank of China account in Shanghai where I was living at the time. And I went to Beijing and there was a sign on the door that said, no foreigner can withdraw money from a Bank of China account, even in a different region within the country. And everything then was actually also like very much cash based. And there's been a monumental shift in the adoption of fintech within China during the period. So that's been like a major transition, and maybe then we can say, for such an advanced country, why are they sort of pushing the main CBDC agenda on like in the world?
Absolutely. Sorry, they just brought in water. Maybe it's not obvious enough. I'm in a live recording. These things happen. Yeah, I mean, there's a couple of reasons. I think from a policy perspective, I think not only China, but many countries are exploring central bank digital currencies, right? And even actually, if we take a step back as well, and we look at it, I half jokingly say that if you ever want to commit crime, you want to buy drugs, you want to launder money, cash is still the best way to doing it, right? It's anonymous. People can, there's very difficult ways to trace it, despite all the tools that we have today. And even, if you look at today, the amount amount of money laundered every year is between 5 to 7% of GDP. And as you know very well, despite the billions of dollars that we spent in the traditional financial services industry in the US, for example, according to the World Bank, we're still able to capture less than 1 to 2% of laundered transactions. So, I mean, from a practical perspective, there's a lot of issues. The good thing with a central bank digital currency is actually, I think for the first time, it empowers policymakers to actually tackle some of these issues. Again, if we take a step back today, if you're a central banker and you love Bitcoin, I mean, you're crazy. It's a bit like a taxi driver being excited to see Uber come in their market. However, obviously, central bankers are not stupid. They realize there's a lot of these features that could be quite beneficial from a policymaking perspective. I mean, money laundering is one that I just mentioned. If you move to a CBDC economy, you're actually able to track a lot of the transactions going on to a certain extent. Yes, of course, then we have a policy debate between privacy and public good or social good. I think that's one of the things that we're enabled to do. Second thing is also from a purely policy-making perspective to see the economic activity in a certain country. Today, again, as you know, economists rely on certain data that is often outdated, often 1 to 3 months old, and it's not very live. We don't have the granular data. Actually, but if we move to a CBDC type economy, we're able kind of almost at a live instantaneous perspective, see the impact of various policies. And these are just two examples, right? And obviously there's many others, depending if you're an advanced economy or whether you're a developing economy. So for example, and the Bank for International Settlements has done actually some data and analysis on this. For a lot of developing economies, financial inclusion is a big priority. But actually in CBDCs in many regards, imagine if every individual could have like a CBDC wallet installed on their smartphone, for example, and then you can have your own wallet, you're able to actually use it. And maybe these people are not profitable customers for banks, but at least in that way, they're able to have central bank money. We can talk about that as well. Something that they can use, on a day-to-day basis as cash is going down. So I think that's one thing to look at, but also for a lot of advanced economies, it gives them kind of it helps on the robustness of the payment systems. In many countries now, the usage of cash is going down, and obviously digital payments are going up. But ironically as well, one thing we saw during COVID, and this happens in every crisis situation, people hoard cash. Actually, look in many economies right now, the hoarding of cash right now is at record levels. It's at during crisis levels right now, because people feel a bit uncertain, unstable. So actually they try to hold some of that money. And actually that poses challenges for central banks, and CBDCs allow us potentially to help address this issue that we're having right now.
So yeah, and let's just dive deep into these things, because I think these things are often lost in the media. So part of what you're saying is that there are some models that are being explored by central banks where they are going to allow consumers themselves to have a direct claim against the central bank. So that would be the example of, someone has a smartphone, they have a wallet on that smartphone, and the money that's contained within that wallet is actually a claim against the central bank itself. That's kind of the direct model. And then in the indirect model, you've got the same kind of claims, but those are mostly brokered through some level of intermediary. So this isn't the end of banks. The central banks in the more sort of sophisticated economies are looking at ways to have intermediated transactions, but maybe for some of the other benefits that you sort of allude to, sometimes it's to do with expanding the tax base, to look at how can more transactions be within the existing tax system. Sometimes it is the robustness, security, efficiency, cost, those types of claims. But in the example of a direct system, should the banks be worried that they're going to get disintermediated by the central bank?
Yeah, it's a good question. So maybe actually on that point, why don't I, just maybe in a professional fashion, if I look at the topic you mentioned, which is the retail central bank digital currencies, right? Okay, if we take a step back, there's really two kinds of CBDCs. One is wholesale, which is between the central bank and the banks. That, I guess, for the average user, the most of the listeners, they won't see it, they won't interact with it. It happens behind the scenes. It's kind of the piping. We can talk about that later if you want. What is probably the most impactful on not only on banks and frankly everybody listening to this webinar is retail CBDC. And there's a couple of different types of retail CBDC. The first one is actually what you just mentioned, Jonathan, which is that's called the direct model, which is a central bank could issue a CBDC, and the customers or the public can have a direct link with the central bank. There's a couple of things here, and to understand, that is a model that is de facto a bit unlikely. The reason being, no central bank today, to the best of my knowledge, wants to get into doing their own KYC, holding the accounts and stuff with the direct public. They're not set up for that. They've never done that. And frankly, also, when we look at all the experiments, there's nobody that's actually following that model. The only exception I would say is actually the tiny nation of the Marshall Islands. The tiny island of 50,000 people in the Pacific. But in that case, it's a bit different because there's no central bank. So the government there is issuing something called the SOV, the sovereign, and there's it's kind of decentralized from that perspective. But putting that model aside, the model, there's the 2-3 models that are being very actively discussed. The first one is what you meant. The second one is what you mentioned, which is what we call a 2-tier system, which is you have the central bank that issues a CBDC, but that all the traditional intermediaries are still in place. So the public actually interacts with that CBDC via the traditional players. And that's probably what's being done right now in China, even in the US with the digital dollar initiative. That's being done in the Bahamas, the Eastern Caribbean, and many other countries. That's the model that is being taken. If I was a betting man, if and when we go to a CBDC model, I would say it's very likely that is the model that will probably be taken for a couple of reasons. One of them, because you enable some of the functionalities of CBDC without too much disrupting the structure, the status quo of the financial system. And you may, and there's other models as well we can talk about. One is a synthetic CBDC, for example, where non-bank fintechs and others could have an account with a central bank and issue kind of a stable coin, if you want, where it's 100% banked at the central bank. That was pioneered by the IMF. It's called the synthetic model, and we can discuss that a bit. And there's other models. For example, one was pioneered by popularized by Riksbank in Sweden, and most recently by the Bank of England, which is what I like to call, for lack of a better word, the platform model, which is a central bank takes in charge of infrastructure, and then non-bank fintechs, banks can kind of plug in and be able to use CBDC. Specifically to your question on the impact of banks, and this is, I do a lot of work with central banks, policymakers, but also a lot of financial institutions. On this particular topic, if I look overall, are CBDCs positive for financial institutions? Retail CBDCs positive for financial institutions? I would say overall, not really, because I have trouble seeing what are the benefits they will make out of it. I would argue there's a lot of cost. If a CBDC comes in the market, the banks have to come up with new piping for it. There's new rules on treasury, risk management, cybersecurity, traceability. And there's a lot of actually cost that will need to incur. But more than and for what actually? For something they're able to do right now in a fractional banking model that they have today. But however, where I think the biggest impact is really from a policy-making perspective. Let me give you 2 examples. Today, if I do not trust the banks anymore, let's say I'm in a crisis situation, I believe there's a financial system is unstable. I'm not talking about a particular bank, because if you have an issue with a bank, you can move your money relatively easily to another bank. But it's I don't trust the banking system anymore. I can go to an ATM and try to actually withdraw cash from that ATM. But there's obviously physical limitations to where I can store that money, how I transport it, and the security reasons, and so on and so forth. The problem with a CBDC is that I actually probably could withdraw all my digital currency pretty quickly in a digital wallet, right? And it's pretty easy to store it as well. And this actually causes what we call can accelerate a run on the banks. If people start taking their money away from banks, it may really accelerate the run on the banks. And that's something that policymakers are very afraid, because as probably most of your listeners know, commercial banks today operate on a fractional banking model. Is that there's a certain percentage of reserves that are held, but actually the banks, their balance sheets, the lending they do, and other activities, they use that money to do other activities, right? So if everybody withdraw their money, there's a serious liquidity issue. So that's one thing to bear in mind. And there's different ways of mitigating this that have been discussed. For example, one that I like recently was from the Netherlands Central Bank, where they proposed to put a limit on how much people can actually use of CBDC. In their case, I believe it was an amount between 4,000 to 7,000 euros. They believed that was the amount that was kind of replacing cash, but it wouldn't cause financial instability. The problem there on that point of putting limits, a lot of central bankers will tell you they're worried that in case of instability, politicians and policymakers may want to take out those limits, and they may accelerate the run on the banks. But also, second example is very directly on financial institutions. today, when I deposit my hard-earned dollars at a bank, the bank is able to give, I mean, they give me a little interest rate, but they're able to use this money to do lending and other activities that in their normal business activities. In the event that people are holding more money in a CBDC in digital wallets, not depositing that in banks, that may affect the banks need to get funded on the wholesale level. It's more expensive. The revenue, it affects your revenues and your profits as well. So I think these are things that you have to consider when you look. So overall, I think it's good for society, it's good for the public, and that's where central banks are looking at it. For traditional financial institutions, I'm not sure there is that much of an upside. It's probably more a lot of costs and headaches, frankly, in the short term.
And specifically, that's on maybe more of the retail CBDC model versus the wholesale model. Because if we look at the wholesale model, you would think that some of the benefits would have to be improvement in treasury operations, risk management, cost associated to that for the banks themselves, because or the payment system going down, or those types of things. Otherwise, there would be like very little ability to get adoption on that. So, but as you sort of mentioned, a lot of the conversation is on the retail side, because it's around access and competition and driving efficiency in the market. We understand
I think the one thing we have to look at wholesale CBDC is there's different models there as well. For example, a lot of the initial CBDC pilots initiatives that people have heard of, from Project Jasper in Canada, Ubin in Singapore, and many others that have taken place, often focus on a national level. So how can we use wholesale CBDC to kind of make the system better and more efficient? The others have been looking at a cross-border level. If you look at a project called Stella between the European Central Bank and Japan. More recently, actually, for a lot of your listeners who are interested in this, probably I would say the most advanced on this is what has been happening between Hong Kong and Thailand. It's called Project Lion Rock Aitonon. So very interesting conversations there have been happening, and there's great reports on it as well, on how it can help on a cross-border perspective. So yes, it helps the back end, if you want, the piping. And I think you hope this is going to actually trickle down to consumers and make hopefully things cheaper, faster, and more efficient. And so I think for a wholesale CBDC, you're right, banks may benefit, but I think the whole hope is it'll trickle down to the general public as well.
You make a really good point there, because I think that you think about the wholesale market as being also having this cross-border element to it, which actually is sort of an area where there's all this correspondent banking that happens, where and you're shaking your head with sort of PTSD. It's a very cumbersome process, and international payments have a lot of problems with them. I think that one interesting component to the central bank digital currency initiatives, and I'd be interested in your perspective in this, is that if a country is able to allow consumer or banks, institutions beyond their borders to transact directly in their denominated currency in their country, you can really extend and challenge sort of what today is the US dollar reserve system, where that is the main place where international financial transactions get cleared in US dollars, and hence are associated with all of the regulations and laws that the US governs. So to some extent, when I look at central bank digital currencies, I also look at it from a geopolitical point of view and see some of these countries are able to then extend sort of their sphere of influence beyond their borders, and get their major trade partners more closely integrated into their economy, which has sort of very significant geopolitical ramifications as well. I'm wondering, like particularly in APAC, I think that it would be great to understand your perspective on that.
Sure. I mean, so let me tackle it in two different ways here. The first one on an APAC perspective, I mean, many of your listeners who are involved in digital assets, I would argue that APAC as a region is probably ahead of many other regions when it comes to digital currencies more broadly, right? The whole crypto space, let's put it that way. When it comes to CBDCs in particular, I think we have to look at what's happening around the world and what's happening in China as well. The People's Bank of China, which is a central bank of China, has been researching this topic since 2014. That's 6 years ago. I mean, now you're seeing a lot of central banks around, not only in Europe, but also in the Americas, now just starting to look at it, doing some research pieces, doing maybe some basic experiments. Whereas when you look at China, I mean, not only they've passed through all these phases, they've announced recently that they're going to start live pilots. For example, the first phase in the 4 cities in Shenzhen, which is the kind of the Silicon Valley of China. Second one is in Chengdu, which is in Sichuan, which is the panda cute city where a lot of cute pandas are. And then third one is in Suzhou, which is the kind of the next to not far from Shanghai. Marco Polo used to call the Venice of the East. And then the fourth city will be Shongang, which is about an hour from Beijing. So these are actually cities where it's pilots. These are not little villages. I mean, we're talking millions of people there, but I think they'll obviously start very small. So these are actually it's being rolled out. It'll be piloted as well. So from that, and also let's not forget what I mentioned at the beginning of the webinar. Again, the mobile payment penetration in China is very, very high. So people are used to it, and in many regards, they won't even realize that they're dealing with CBDCs in their everyday interactions, right? So when I look at that and I look at what's happening in other parts of the world as well, yes, I think there is, when you look at the future of money, I think those of you who subscribe to my LinkedIn newsletter or follow my videos on LinkedIn or Twitter and YouTube, is a topic I talk a lot about, the future of money, where it's being really driven. I would argue that right now, China is way ahead of everybody else. Yes, there's certain particular conditions on it, but I think in this area, you definitely need to keep an eye on what's happening in China and also Asia, by the way, which is a lot of the other Asian nations don't get kind of the same marketing as they should. I mean, what Singapore has done with Project Ubin, the last phase, for example, it's production ready. It's very interesting what they've done. What Hong Kong has done with Thailand, the Wholesale CBDC with Lion Rock and Itonon is super impressive, very, very technical. And even smaller countries like Cambodia. Cambodia, for those of you who are looking for some really weekend reading, a really, really great CBDC project they have there. And really the goal, actually, the central bank explicitly mentions it, that a lot of people in Cambodia, a great country as well, for those who haven't visited, use US dollars on a day-to-day basis. And they want to issue kind of central bank money that can actually kind of challenge that within the country. So a lot of these things are happening in Asia. These are not academic pieces. These are not theoretical pieces. That's something to look at. The second comment I will make, though, is, however, when I look globally at all the different CBDC initiatives, for the big part, they're only focused at the national level. None of the central bank digital currencies right now are looking at a cross-border perspective or explicitly to challenge the dollar, for example. Even look at China, the China model right now, the DCP, which is the official name, often referred to the digital yuan, the initial purpose is only within the country. Yes, many would speculate that China may want to use this outside its borders. For example, a great use case is the One Belt, One Road initiative. You have 60, I think over 60 countries right now in that One Belt, One Road initiative. Many of them, they still use the US dollar for their trade activities. Maybe that could be potentially use case down the line. But right now, I think if you look at what's happening in the next short term, it'll be at the national level. However, what I think could be interesting challenge to this, and I think it's going to be interesting to see how it plays out, is some of the new stablecoin initiatives coming up. I mean, ironically, right now, if you look at the broader usage of stablecoins around the world, over 95% of them are based on US dollars. So ironically, actually, stablecoins are maybe potentially could help US dollar from that perspective, right? The one thing that I think could be interesting for smaller countries is initiatives like Libra. As many of your listeners know, Libra was first announced in June 2019. A couple of months ago, Libra 2.0, for lack of a better word, came out, where now it kind of became more of a stablecoin model. And I think that's going to be very interesting, not for the big currencies, not for the G7 currencies. So I'm not too worried about the US dollar. Ironically, I think it can even help the US dollar. But I often reflect about the national currencies of smaller countries. If I'm a migrant worker, of country A, and I want to send money to my country B, if I could easily do it with Libra, Libra USD, Libra GBP, Libra Japanese yen, maybe that actually can have what we call the currency substitution risk, that actually smaller countries may see more dollar usage, Libra dollar usage in their country. And this is actually one of the reasons you've seen the Libra 2.0 white paper. They explicitly kind of reach out to central banks saying, hey, if you're worried about this, come and talk to us. Maybe there's ways we can collaborate from that perspective. So I think that's something to watch when you're looking at a global level.
Yeah, so and that's great because you mentioned a couple of things there which I want to double click on. One of which is how CBDCs are going to interact with digital currency, with central bank digital currencies, and the other is actually sort of how stablecoins and quite frankly crypto interacts with central bank digital currencies and how that changes. I mean, one of the things that we've been tracking at Chainalysis, obviously we collected a lot of data about how and why cryptocurrencies are being used in the world, and putting out a lot of research on that at the moment. And we've seen sort of a massive increase in the amount of stablecoins issued and the amount of transactions that occur on stablecoins. And do you think that is really driving some of the innovation on CBDCs? Is that why we've been having this conversation?
Yeah, it's a good question. I mean, I often get asked this by the media. Okay, what's happening on CBDC? I often tell them that really what I'm focusing the next 12 to 24 months. Yes, there'll be a lot more experiments with CBDCs, but I'm really following what's happening with stablecoins. I mean, as you guys, as you mentioned, Jonathan, the usage of stablecoins are at record levels, and what's really interesting is actually that people are using it more and more. I have to say, I commend you, Jonathan, and to you and your team. Some of the research you put out recently on this topic is very useful, not only for everyday use, but also for the broader ecosystem. For example, what you're mentioning, the recent report about the trade going on between like Asia and Africa or Latin America, for example, using cryptocurrencies, mainly stablecoins. Even myself, I can tell you 2-3 weeks ago, I had to make a payment to Canada. So from Hong Kong to Canada, and my lovely bank here in Hong Kong doesn't allow you to do FX transactions on a Sunday, which again, in 2020 baffles me. And actually, I just sent stablecoins. Again, it works 24/7. It's cheap, it's easy, it's efficient to my young sister in Canada. So again, I think we're seeing a lot more of that activity. So especially with the if and when Libra launches, that's really something that I'm following very closely from the usage every day usage of stablecoins and how that could be useful, especially from a cross-border payment perspective. Like I mentioned before, today the average fee of cross-border payments is around 7% blended. In many emerging markets, it's double-digit. And let's not forget, we have over 250 million migrants sending over $500 billion a year in remittances. And these are often the people who should not be paying these high fees for these transfer for the small amounts that they're sending, right? So I think hopefully this will be able to benefit from that perspective. So I'm really following what's happening with stablecoins, and the development we'll see there, not only with the regulated stablecoins, the USDTs, the Paxos, and all these ones, but also some of the unregulated ones like the USDT, Tether. But also, I'm really following very, very closely what's happening in the the DAI space, all the the centralized. If touch on DeFi a bit, but I'm really on some of these the maker DAI and so on and so forth. That's coming up as well. So very interesting how the elements of stablecoins are going to affect how it's going to impact cryptocurrencies is a very interesting question. If personally, I find that tools like, let's say, Libra and others, or even CBDCs, they bring more awareness on the issue, on the whole topic of cryptocurrencies. A great example is whenever I teach this topic at the university, or I speak it to a lot of financial services professionals, or even my mom. I always give the example of my mom. My poor mom has never understood what I do. 2-3 years ago, I gave her her first Bitcoin, and now she follows the crypto markets. But often the question that I get is, well, if I'm able to do digital payments already, why do I need a CBDC? I think that's something that's very important for people to understand. Today, when you're making digital payment using Venmo in the US, using PayMe in Hong Kong, using whatever platform you're using, actually, what you're doing is actually just it's debits and credits on two providers. You're not really holding central bank money. Today, again, just putting my professor hat on back for a second, there's only two forms of central bank money. One is a good old cash that you hold, which is, like it's you have it, it's actually claimed on the central bank. And the second, that's the first form of central bank money. The second form of central bank money that we have today are the reserves that your bank holds with the central bank. The money that you hold with a bank, you actually have technically a counterparty risk towards the provider. Yes, there's a lot of insurance and there's government guarantees up to a certain amount, depending on your country. But at the end of the day, the money that you hold with these payment providers or the bank is not central bank money. And I think what the conversation that the whole stable coins and the whole Libra conversation, I think brought forward this conversation with the mainstream public as well. people saying, actually, what is money? What is central bank money? I always see actually with my own social media content during the pandemic, if there's one good thing that came out of COVID, I would argue there's been more awareness now on our global payment systems and on the future of finance and the future of money. I mean, look at the US, for example, where the US IRS, an organization that I respect a lot, but had to send over 100 million checks by post for their stimulus payments. The fact, again, we have to do this in 2020, it's still, I think, a bit shocking from that perspective, right? So I think that's one of the things we have to look. It brought more awareness on the issue. It brought more conversation on this issue. And that's something I think we, in the crypto ecosystem, as you know, Jonathan, we've been trying to bring up on top of the agenda for many years. And thankfully, Libra did that, and now CBDCs are doing that. And more recently, COVID did that as well.
Yeah, and one of the things that I think about is sort of, we live in advanced economies. When I go to the coffee shop that's just reopened in New York, I can't touch anything. Everything needs to be contactless, and we're using digital payments. No one wants to touch cash, and that's going to have some lasting impact, and people's behaviors are definitely going to change. In a lot of economies where cash is still king, you could definitely see some movement away from that, and that accelerating. But speaking of like the technology in these different markets, how mature is the actual CBDC technology? You've got stablecoins working today. You've got things running on Bitcoin. You've got Ethereum and currencies running on those, and those are live working things. Where is the maturity of the actual technology behind CBDCs, and what does that roadmap kind of look like?
Yeah, great question. Just on touch on your earlier point on cash, you're right. Actually, there's still a lot of nobody wants to touch cash right now. They're worried actually may transmit the virus. But actually, if you look at the data, even Christine Lagarde from the European Central Bank just mentioned last week, still over 75% of small payments in Europe are still happening in cash. And again, people have been hoarding it as well. So it's very interesting what's happening from that perspective and the impact it's going to have, especially for those who are unbanked or underbanked. Even in the US, Jonathan, over 40% of Black and Latino households are either unbanked or underbanked. So I think we have to think a lot of these policy considerations. Let's look at, so to bring it up to your specific question on the issue of the technology. It's very interesting because I would argue today, if you look at a lot of the national payment systems in many countries, right, actually the system may not be perfect, but it's pretty good. Many countries now have FPS, which is faster payment system. Many have RTGS, real-time gross settlements. The system actually works pretty well. And again, the problem becomes when you go into the cross-border level. When it comes to CBDCs in particular, like on stablecoins right now, if you look at over 90% of it happens on the Ethereum blockchain, and obviously there's a number of blockchains, from Stellar to Algorand to Tezos and to Block One and so on, EOS, trying to actually have offerings on this regard. I would argue actually from a technological perspective, I don't think technology is necessarily the issue here. If people are looking for a permissioned offering, with the Corda, R3, and many others, you have these offerings in the public level as well. I think you have all these solutions. I would say the biggest issue we have right now is more on the governance, the controls, the policies, the procedures in the event such a CBDC is announced. How are you going to manage it? Some of the practical considerations around, not only from a central banking perspective, but actually from the participants in the market. Think about a bank CEO today. If CBDCs come into force tomorrow, there's a whole rollout plan how this is going to impact from technology to your IT, to your security, to your treasury, and so on. That's something I think that's going to take quite a bit of time. I would argue the biggest issue we have right now is on a policy perspective, because today, like I mentioned earlier, there's two forms of central bank money. There's cash and the reserves that banks hold at the central bank. I really believe we're going to be the lucky generation who's going to see the third form of central bank money in the form of a CBDC. But the policy questions that I mentioned earlier in this presentation, the run on the banks, the funding of banks, then how is credit created? Today, if you think at the again, putting my professor hat back on, every time you deposit money at a bank, every time the bank makes a loan, in practice, what they're doing, they're creating money, right? They're able to lend it out. And, so I think we have to think about what is the practical impact on the way the economies have been functioning for a long time if we introduce CBDC. So I think, and these policy debates are taking place right now. Yesterday I spent 3 lovely presentations with central bankers on this topic, discussing it, the pros and cons. But these are serious issues, because unlike other experiments that we do in the crypto world, from ICOs 2 years ago to more right now with the DeFi, for example, you could not get it wrong with money. If you think the payment systems we have at the country level globally need to work 24/7. So I think these are very serious questions. And I expect over the next couple of years, they will become more mainstream, especially some of the critical ones. I was mentioning at the beginning of the presentation, technically with a CBDC, a central bank could see all the transactions in the country. Now, as a policy, from a policy perspective, do citizens, where you draw the line between personal privacy and the greater good of being able to combat money laundering and terrorist financing and so on and so forth, right? So I think these debates will come more and more on the forefront. So it's very interesting what's happening for the next couple of years on this topic.
Yeah, I think that's right. And actually, I think that from the technology standpoint, that's really where you might see some innovation on, particularly on the privacy and transparency aspect of it, where you could definitely foresee a system where certain limits get hit, with certain privacy concerns, with some low dollar value or low sort of value transactions being done with not that much identity proofing, with higher value stuff having higher values, and really, I think the technology to be able to implement these things, a lot of people are drawing from cryptocurrencies to understand, what are the privacy implications? What are the best models of mitigating, financial crime risk with, ensuring civil liberties and financial privacy? And, I think that when we're talking to people, I like to say, Bitcoin has proven in a lot of ways, in a domain where there's not identity associated to the payment itself, there have been sort of the traceability and the mechanisms put in place to be able to solve a lot of financial crime, but ensuring that there still is financial privacy for the people who are using it. And what's interesting is that this is one of these domains where cryptocurrencies has a lot of spillover innovation from just being that sort of organic experiment that people are using. Looking at the work that we've done over the last 6 years, you can understand sort of what it takes to do these types of investigations and mitigate the financial crime risk with this new technology. But to your point, I think that we haven't fully resolved the issues about what level of comfort do we have for privacy and fighting financial crime. That's going to be an ongoing debate that continues. So I think that's where the rubber meets the road. The conversations need to be had, and particularly I think it's like a very interesting area to watch.
It brings up a debate, Jonathan, right? Because as you mentioned, I'm personally a big fan, and I know it's quite controversial, and but I'm a big fan of the traceability solutions like yourself, by the way, you have built, because I really believe there's this one of the obstacles to more adoption of cryptocurrencies in many from traditional players. They say, it's all used by money launderers, it's all used by drug dealers. As you know very well, Jonathan, if you want to buy drugs, do not use Bitcoin. You will get caught using great solutions like chain analysis, right? I think that's one of the things where, unfortunately, I think there's still a lot of misconceptions on how these things work. But also, I would argue that there's also different kinds of CBDC, right? If we remove one layer down, there's something we call like token-based and account-based. Again, just to my professor add on for a second, when it's account-based, really means that as a CBDC user, you're dealing with there's an account provided by somebody, whether it's a central bank, unlikely, or one of the providers. And de facto, it operates a bit like your bank account today. But what we may have with a token-based CBDC is a bit like literally a banknote today, that actually you'll be able to hold it in your wallet. And if you and I were meeting each other, I can give you, by NFC or whatever, I can actually transact and give you these token-based CBDC, very similar to how I could give you a $10 note, for example, if I wanted to. And on those levels, I think if I was a betting man, and as these things evolve, I would argue that for minimus amounts of transactions, frankly, we don't need the level of KYC. And already, like if you look at the money laundering regulations in Europe, for example, where you have these de minimis levels, I think we have to take a risk-based approach. If you're a drug dealer today and you want to launder money with small transactions, I mean, good luck, right? It's actually the bigger transactions. Like, I mean, all your listeners who are in government circles or regulators, this is actually the policy approach that's been taken. I foresee the same to continue as we move along with digital assets.
So yeah, and I think that's a good point. And the thing that you mentioned before, just for people that are sort of less familiar with these things, is that in a lot of countries around the world, and you talk about the risk-based approach, we have very much principle-led regulation, which basically means that the policy objective is clear, and we are agnostic about what the technology is. So whether it is whether it's on Bitcoin or whether it's a CBDC or whether it's a traditional payment system, the regulation is fairly agnostic, and we take this risk-based approach in order to have sort of equal regulation across those, so that we can meet the policy objectives of the regulation. So I think that that's a really important point when people are thinking about this, because that's where that's the direction that we see it heading in. And to that point, the AML side of this, and so the domain that we occupy in the cryptocurrency space, that's still going to apply in central banks, because the same type of controls are going to be needed in order to mitigate that type of risk. So I know that you've generously given your time. I'm gonna ask you a sort of cheeky question where we get some free consulting from PwC. If you were in our shoes as Chainalysis, and our key market today is really around public ledgers, things like Bitcoin, Ethereum, for anyone who's touching cryptocurrency or interested in any transactions that cross those, we have some value to give them. What should we be doing today in the CBDC world if you had to come and step into our shoes?
First of all, I would love one day when I grow up becoming Jonathan Levin's shoes. That would be an honor. That's what I aspire to. But until then, being a humble peasant, I think a couple of things I think you should look at. The first thing I focus on, not only for Chainalysis, by the way, and your team, but I think for everybody else, is education. This is one thing that is, I find it very intellectually dishonest that a lot of people actually disregard cryptocurrencies or even CBDCs without actually taking the time to understand it. And I really believe we owe this, because not only the impact and the benefits for society, for our children, our grandchildren, are so meaningful. I mean, as many of you, your listeners know, I mean, my last book became a global bestseller called The Future of Finance. I'm actually working on my next book that is coming out next summer called The Future of Money, where literally I completely take not only the history of money, but go dive in all these different verticals of crypto. And my goal is to empower people to be able to understand it. And that is, I think, nothing that bothers me more about it than anybody who does not spend intellectual effort to understand. That's the reason, again, on my social media videos, on my crypto capsules, my fintech capsules on LinkedIn, I do a lot of education. I just posted a video on Monday, actually, on central bank digital currencies, 8-minute video to help you understand what is a CBDC. So I really believe all of us in the crypto ecosystem, we have a role in educating, because I really believe if people are not educated, you're fearful and you don't understand it. And I have to say on this point, I'm very impressed by, I think in the crypto ecosystem, people give it a lot of slack or criticize regulators and policymakers. Look at regulators right now. Today, according to Cambridge University, 95% of regulators have somebody on their team working on crypto. 95. That's probably higher than a lot of financial institutions. In my own personal experience, I would argue that probably the average regulator that I speak with is more knowledgeable on crypto than the average financial services professional. And the same applies for law enforcement, central banks, and so on and so forth. So I think that's one thing from education perspective. We all have a moral duty to do this. And I think the crypto ecosystem, firms like yours and others have been doing their part, but I think we need to bring this more mainstream. The reason you mentioned at the beginning of the presentation, I teach the first fintech university course in Asia. It's been already 6 years now. And many say it's the first in the world, but I have no way of proving it. The problem I have, the reason I started teaching, because I find it's unacceptable that today, in this day and age, We let students graduate out of universities without courses on fintech, without courses on the future of money, and also basic courses on the, computer science, programming, engineering, and so on and so forth. And this is, we need to empower people who are studying finance and business and all these topics. I recently, I met a girl who just finished accounting. She's becoming an auditor. And I told her, how many times in your courses did they mention blockchain? 0. I mean, that is a failure of all, the education system, the academic system. It's unacceptable. So that I would say is the broader public. For companies like yours as well, I think it's going to be very interesting because frankly, what you're doing right now with public ledgers will easily be able, and actually will have even more value in a CBDC context or in private ecosystems as well. And I really, really believe that this is the whole traceability element, the money laundering issue. This is, for the first time ever, gives us a fighting chance against money laundering. And this is an opportunity. It may not be the right one, but it's something we should seriously look into it. So I think that's why I'm very happy to see that there's more awareness on this particular issue that you guys have been promoting for some time.
Yeah. And I think that's great. And we're definitely doing our part with a lot of education. We put out a lot of content. If people are interested, we've just released a geographic study on how cryptocurrency is being used around the world. People can go find that on our blog at blog.chainanalysis.com and download the report. We've definitely got something specifically for the APAC region, which sort of explores it's one of the regions in the world where crypto is its most popular, and a lot of the fundamental economics that sit behind that. So definitely go check that out. I would really really appreciate all the insights and definitely actually the breakdown and real frameworks to think about central bank digital currencies. I know it's sort of that word that gets thrown around, but you've really unpacked that and given people the perspective of what are the retail versus wholesale. We've gone into all the different models of retail, from account-based systems, token-based systems, direct models, indirect models, synthetics. Really unpacked sort of exactly what is going on in all of these experiments around the world and proof of concepts, and really understood sort of even the policy objectives that people are trying to meet. Sort of
right.
expanding the tax base, understanding resiliency, efficiency, cost-saving potential on the wholesale side, maybe some cost reduction on the cross-border payment side as well. So really giving people an overview of what are the driving forces and macro drivers behind this conversation, and really also giving banks and different geographies a good understanding of what should be their considerations when they're thinking about central bank digital currencies. So I really thank you for coming on and giving us those insights. If people want to follow more of your work and understand where to reach you, what is a good, where are you posting? How should people follow your work?
Yeah, sure. No, well, thanks for that. I know a lot of people reach out for they want to keep on top of it. I know people are busy, right? So there's 2-3 ways of doing that. The best way is LinkedIn, where you can follow me on LinkedIn. I have over 500,000 followers, and I really provide a lot of content there. There's 2-3 shows that I have. One is my crypto capsule, where every week I give the latest developments people need to know in less than 60 seconds. So again, if you follow me on LinkedIn, you'll be able to get that. And every Saturday, I send out a newsletter. Actually, I'll be covering soon some chain analysis research, actually, called The Future of Money, where it's more the big ideas, what are the big trends going on. Again, if you just have 3-4 minutes, that's what you need to know on the topic. So it's literally LinkedIn, it's Henry Arslanyan, and it's same thing on my Twitter handle, Henry Arslanyan. On Twitter, I put more day-to-day activities and what's happening on the space. And of course, there's my YouTube channel, Henry Arslanyan, there again, where you can find a lot of basically my all my depository videos, interviews, all the content that I've made over the last couple of years is available there. So really, education is a big priority. My last book came out. You can find it again online, The Future of Finance. And so I'm happy to share and happy to be on. So thank you very much, Jonathan, for having me and actually allowing us to share our passion for the future of finance and the future of money with you and your audience. So thank you very much today.
No, thanks so much. And for those people that are joined us late or have a friend that should see this or anything like that, we will have a recording of this sent out by email this week. And it will also be on our links virtual landing page where you can check it out along with past sessions. We've had, other esteemed guests from global regulators and other types of people that people can go check that out on Links Virtual. Also, we're doing more virtual events. These have become the new normal, and we're getting used to them. So look out for banking and digital assets, a conversation with Wyoming Commissioner Albert Faulkner on September the 23rd. If people haven't seen, the state of Wyoming in the United States has been sort of a real pioneer of digital asset regulation. They've been issuing charters and really pushing the envelope, within the US regulatory environment to provide better inclusion and controls around digital assets. So definitely check that out. That's on September 23rd. Going to be a similar format. Albert's got some really unique perspectives about being a state regulator within a broader regulatory environment and really pushing the envelope. So check that out. And there will be more Links Virtual announcements in the coming weeks as well. So please stay tuned. Chainalysis posts about this on LinkedIn and Twitter. Go to our blog to see our latest content where we've got that geographic report. Check Henry out on LinkedIn. His content is awesome. And thanks so much for dialing in late if you're on the East Coast, and good morning to all of you who are just getting your morning coffee. I hope this was entertaining. And we'll see all of you soon. Thanks.
Thank you very much. Thanks for having us. Thank you very much.
Okay. I can now stop the live stream.